Please do not think we are done. There are a few more things I need to show you guys, so stick around. You need to keep watching this video cause I have something special for you.
Now, there's another concept when we understand liquidity. The market has a tendency to run out old highs and old lows, but it has a very difficult time to do that when the market has conditions like this. When the market moves higher, okay, generally we can see a move higher and then it moves lower here. Now, in the context of this entire move lower, there's a lot of peaks and troughs here. A lot of peaks and troughs. The idea is if this is an old high back here, for this high to be ran out, okay, or to seek the liquidity resting above that old high, if this is where the current market action is right now, or current price at market price, for it to get all the way up there, it has to encounter a lot of resistance in the form of old lows and old highs. So you have the old lows acting as standard resistance. Then you have the old highs acting as buy stop liquidity. So even if the market's going to go up, if the market's going to seek the liquidity above this high, how do we know it's going to stop there? It could go another level higher for these buy stops. And it could reach for this level of buy stops, and then maybe this buy stop level here. In the direction to run all these buy stops, it's got to go through a lot of resistance in the form of these old lows just to get back up to this old high. When the market presents these opportunities, and again, this is not specific to any time frame, it's universal. But when we see the market give this very thick area of resistance, okay, there's a lot of price action that the market has to trade through to get back to an old high of significance, we view this as a high resistance liquidity run. The market's going to have a very hard time getting through all these previous lows and previous highs just to run out the liquidity that will be resting above this old high. When we trade, we are not looking for these opportunities. While there are opportunities to trade with this in mind in other later teachings, it's important to understand that this is the least probable trading condition to look for longs, because you have so many levels of resistance and old highs to encounter before you get back to the old significant high. We understand that the market has been presenting lower lows and lower highs, and somebody in this market is obviously would be being profitable. Those individuals with stops above this old high in the form of a fund, they're actually very highly defended because of this type of price action. So it's going to take a very sharp economic market release, the data, kind of like non-farm payroll or FOMC. That type of event will knock through all of these levels of resistance to run out that liquidity. But generally, without that type of influence or injection of volatility, these old highs generally are well defended. Obviously, the opposite can be said when we see the market make a low of some kind. It could be it take a long time really to form this, but the old low would obviously have sell stops below it or sell liquidity. And as the market makes higher highs and higher lows, if we're seeing price action right here, we can't reasonably expect the market to just drop straight down and make a run on the sell stops below this low without encountering first all of these higher lows and higher highs as the market went higher. So to get through each one of these highs, okay, there's going to be a lot of resistance to just run down out the stops that would be resting below this low. Again, just like we just mentioned with the high resistance liquidity run for old highs, the same is true here for high resistance liquidity runs on an old low. It's going to be very difficult for price to reach down through all of this price action, and the more time it's spent in this area, again, the more unlikely it is to make a market move all the way down to this old low. Despite the fact that there may be really high levels of liquidity resting below that old low, without the evidence of a significant market driver coming into play with like an FOMC interest rate announcement or non-farm payroll, or something that would be completely unexpected in the marketplace, a black swan event, something like that, that's generally the only type of thing you see that will cut through this type of price action to get to the sell side of the liquidity here. So for shorts, we avoid these types of occurrences. There are opportunities that we'll learn with trading with this profile or this market condition for high resistance liquidity runs. But for now, we want to understand that this is the element of price action that we want to trade very less frequent in. Now, obviously,